Are you just trading or gambling with the charts? This is the topic I want to talk about today and give you a very big difference between a gambler and a trader. But before I give you the difference, there's a lot of similarities. Everything in life is a risk. Living on its own is a risk. Taking a walk down a pathway is a risk. You never know, especially if you're walking on the side of a car and cars are just passing. It's a risk. Anything you do, eating certain foods is a risk. You never know what might happen. Many people have succumbed to injuries just by swallowing food. You never know. But in the long term, is trading different from gambling? Now, this came to my attention because this is what has been really trending around Kenya. And people, you've seen a lot of people on social media, people playing around here saying they're traders. Well, actually, they're gamblers and not really taking the trading seriously. And in anything you do, you can gamble with it. If you start a business today and you want to get into real estate, but you've never done real estate before, but you want to start building buildings, you're seeing the surge everywhere. Maybe you have a lot of money. Hopefully we all get there one day. Everyone who's watching, where you have a lot of money, but you use it strategically. But there are people who can gamble it away. They say, okay, this real estate business looks like it's booming. You've seen how Kileleshwa are building up uprises everywhere. Okay, maybe say, okay, maybe it's a booming business. You don't know anything about it, but you have the funds. You have 500 million Kenya shillings seated somewhere, and you say, okay, let me do this. My friend, you're gambling it away. You start a restaurant chain and you've never done restaurant business. You're gambling your money away. Anything you do without understanding what you're doing is a gamble. It wouldn't even pass your mind to try and do first aid or try to treat someone who's been injured. Maybe someone has been cut and you come and say, okay, guys, let me just try this and do something with the hope that you'll become successful and help them recover. That is gambling with that person's life, that person's good health. So the same mindset is also brought into trading, where people believe just by understanding a few things here and there, they are not gambling, but actually trading. No, my friend, just because you've read 3 books and you've looked at the charts for 1 month and you start trading does not mean you're a trader. You're still a very big gambler. Now, today I want to talk about certain points where we look at the similarities and we look at the differences so that we can get to know, are you a gambler? Are you a trader in the financial markets? So I'll start with the similarities. And similarity number 1, both involves risk and uncertainty. I don't know where Bitcoin will be trading tomorrow. I don't know whether gold will go up or down in the next few hours or in the next few days. I don't know what is going to happen to the Apple stock. No one knows. There's no insider information that is so accurate that we know exactly what is going to happen in the next day. There's a lot of uncertainty in the market, and it involves a lot of risk because we do not have full information. And even if we have full information, we do not know what will happen next. It is not theoretical. Like if you come and study about finance and you learn about interest rates, the cause and effect of interest rates, when interest rates are increased, the effect in the market should be to see that currency going up in price. But that's not what we see. Markets tend to go where the markets go, and no one really knows where the market is going to go. Second similarity, both can lead to big wins and big losses. It's a 50-50 chance. If I come in today and just decide to buy Euro USD, I don't know where the market is going to go. But I just put in some money and I risk my whole $100. And market goes up. I can triple my money and quadruple my money very fast. So you get those big winners in a short amount of time. But at the same time, in a flash of a second, you put your money on gold and instantly the money has disappeared. You think this is a scam. Whoever brought you into this industry is a scam. No, my friend. That's not a scam. You just did not know what you're doing. Same thing as gambling. If you don't know what you're doing, it's a 50-50 chance when you're gambling. It could work, it could not. And your money could easily be gone in a flash, or you could easily quadruple it. Both use money to chase more money. The old adage goes, how can you not trade? How can you not use money in order to make money? People normally ask us, what's the right amount for me to start trading on Forex, cryptocurrency? How much do I need? Now, you can start with any amount. There's no limit on the minimum side. There's no limit to the upper side. Okay? We're giving you the chance to learn Forex for free at Financial Hub. But there's a little twist to it. All you need to do is fund your Paperstone account and boom, you're all in. Deposit $100 and get access to our basic course. Perfect for beginners. Or deposit $250 and get access to our exclusive course that is best for advanced traders. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in. But the question is, do you need more money to chase more money? And the answer is yes. For you to make money in Forex, you need to grow your money. You can't just come with zero amount of money and expect it to go. 0 times 100% return is 0. Actually, if you have $1 at least and you multiply times 100, you have $100. So you need money in order to make money. So it's a similarity both on gambling and also in trading. Even in starting a business, you don't start a business with zero amount of money or zero amount of capital. Let me talk more about capital, especially when you're talking about businesses, and maybe in future, Ken and I might start something in terms of business, sharing about businesses. When I talk about capital, we're not only talking about financial monetary value, we're also talking about network capital, social capital, financial capital. There's a lot of capital that is needed. So in business, you need some way of capital. Might not necessarily be financial, but you still need capital, network capital, someone who can connect you to someone who can help you start a company. You have social capital where you have the people who can buy the product that you want or what you're trying to build in terms of the business and all that, or the following that you have, that social capital. So it's a matter of understanding capital and whether you have it. But you need capital in order to make more capital. You need network capital in order to get to know other people, in order to know other people. They normally say, there's a saying that says, you just need to know 4 people and you have access to the whole world, because those 4 people know 4 other people and those 4 people know those 4 other people. That's why we call it the network effect. But at the end of the day, you need capital. Both gambling and trading trigger dopamine, the brain chemical tied to the addiction and reward. That's why people get addicted to trading. People get addicted to gambling. And a lot of people who get addicted to trading are the ones who have that gambling mentality. These days, Ken and I, we can go even 2 weeks or even a month without even taking a trade because we're not really tied to that dopamine. People normally say in order to make money in trading, you need to be actively participating in the markets. That's not true. You need to be actively aware of what's happening in the market, but not actively participating in the market on a day-to-day basis, because that is just triggering those dopamine chemicals all over in order for you to get that excitement, that reward. Even if you lose money today, you'll sort of sleep on it. Then tomorrow you want that dopamine effect, that highness, and you want to trigger it tomorrow. And maybe Ken can tell you more about this. He talks more about the psychological side of trading. But both trading and gambling trigger that dopamine effect in you. But here's where the similarities end. Now, let us talk about the differences. And then after this, I'll tell you where you lie depending on how you approach the markets. So the number one differences that we want to talk about is decision by basis. Okay, what is the decision basis? Gamblers rely on emotion and chance. So they're just looking at emotions. If they feel this football team is going to win, and most of the time, a lot of them will base it depending on the team you support or the team you really want to win, because that's really based on emotion. Maybe they bet another team or they got you out in the previous season. So this year you want them to really win. So it's based on chance. But when it comes to trading in the financial markets, it's based on analysis and probabilities. So we do a back test. We do analysis. We go and look at data. We want to trade based on data, not based on chance. So any trade I take on the Forex market, stock market, crypto markets is based on data. Recently, Ken and I were doing some research and we were talking about something we stumbled upon on the cryptocurrencies in the long term. We did some analysis, some back test, and we got to see there's a certain point when this happens in the market. It has shown time and time again that these are very good buying points. And recently, we even got that as market moved from about $77,000 and now it's trading at $100,000. It was a very good buy point based on the research and the backtesting data that we had. So analysis and probabilities when it comes to trading. Risk management. In gambling, it is rarely used. People don't really have any risk management in place. You have $100, 10,000 Kenya shillings, you risk all of it with the hopes that it can quadruple, 10x, even 100x into a million Kenya shillings. And this tends to happen, not so often, but they do happen. So with the hope that it can happen, even if it has a low probability, you rather take that advantage, which in the end, you end up losing your money. Risk management when it comes to trading is central to the strategy. We've always talked about this with Ken. We've never come here and tell you, try and trade and make 100% return in a month. We tell you, yes, that can happen, but at the basis of it all, you need sound risk management approach so that even if you lose money today, you don't lose all your capital in order to trade, not to be able to trade the next day. Edge. The edge in gambling is luck. Luck is not a strategy. When it comes to the trading side, when you're trading the financial markets, the edge is built on research and backtesting and experience. The more you backtest, the more you do your research, the more you build a framework that can help you in the long term. Time frame. Gambling is instant gratification. You want it now. The game is now. Whatever is happening, we want to see it now. You want to be paid immediately. But when it comes to trading, this is delayed gratification. It is structured execution. I told in a different video in the month of April, my strategy on the 4 pairs that I trade, I only trade 3 indices. This is US 30, S&P 500, and NASDAQ 100, and gold. All these 4 markets only showed 3 buy opportunities or 3 trades that could be taken. And mind you, this was after 3 months of not having any trade, because if you looked at the markets, gold were really surging, the stock market was just falling. So there was no edge, there was no place to execute a trade in terms of the analysis and the way I trade. And only 3 proved themselves in the last month. Until now, there's not been any other opportunity with this type of trade that I take. And that's why we're talking about delayed gratification, delayed returns. You have to be patient. You have to really wait for that system, everything to click in place. And it's also good. We talked about this recently when we were reading Elon Musk's book by Walter Isaacson. And if you read it deeply, you get to see that Elon Musk, who's widely renowned for his Teslas, as well as sending rockets into the space, and I'll talk about the rocket space. Before they send any rocket into space, they have a checklist. Just like trading, before you execute a trade, you have a checklist. Now, the checklist has no compromise. You don't come to a point and say, okay, if it's a checklist that has 10 points, you say 5 have been hit, let's go ahead with the trade. No. Everything has to be hit in place. And I remember that time on what they were talking about, it was an issue with the weather. It was a bit turbulence along the way. Elon Musk really wanted the team to push the rocket to go, but following compliance and following everything, they could not let that rocket go until the weather stabilized. So you need to have that. Strategy in gambling is very random, while as a trader, it is documented, it is tested, it is reviewed. Repeat, documented, tested, and reviewed. Outcome control. When it comes to gambling, there's no control. But when you're a trader, there's partial control via your rules and discipline. There's a process that you follow, okay? Where you say, this is enough. This is enough for today. This is my maximum risk for this day or this week. I don't trade this strategy. As long as I see the markets are going up and I could make money, if it's not a strategy I trade, you need to be disciplined not to execute that trade. And last but not least, mindset. In gambling, it is all or nothing. You put all your money or you lose nothing, or you make nothing. But in trading, it is a consistent process of profits. Consistent, slowly, gradually, but sure. In the long term, you can make 3%, then lose 1%. Make 2%, lose 1%. Make 4%, and then lose another maybe 2% in 2 consecutive losses if you're risking 1% per trade. In the long term, you're going to make money. But when it comes to gambling, it is an all or nothing, where you put everything on the table, where if it goes against you, my friend, you could lose everything. Okay? So those are the main differences between gambling and trading. And the 4 signs that now I want to share with you, the 4 signs you're gambling and not trading. and I'll put it in pointer format. If you find yourself in any of these categories that I mentioned, please work on that category to be able to differentiate you between a gambler and a trader, because I've seen, and trust me, I've seen a lot of traders who are not really trading, and most traders are here. They are quite much gambling with the markets. So signs you're gambling and not trading. 1, you trade without a plan. 2, you risk large amounts hoping to win it back. 3, you revenge trades after a loss, and this is common. Revenge trading, you get a loss and the first thing you want to do is revenge. And when you revenge, you even revenge with bigger amounts of money. That is not a sign of a trader. 4, you rely more on luck than logic and back-tested data. And 5, you do not track your performance or learn from your mistakes. And this is what many people don't do. These are the nitty-gritty hard work that goes on behind the scenes when there's no trade running that most people don't do. Most people don't journal. Most people don't backtest. Most people don't try and learn from their mistakes or even try to read more books in order to increase their knowledge about the market. They just want to make money. That is a gambler's mindset. If you're treating the market like a casino, the house will always win. And in this case, the house is the market. Now, on the opposite side, 5, how to stay a trader and not a gambler. How to know you're a trader and not a gambler. 1, you develop and test your strategies. 2, you follow a strict trading plan. You have an entry, you have an exit point, and you have a risk appetite per trade. Number 3, you accept that losses are part of the process. This goes without saying. Trading, you'll always have losses, but you control the losses. They're in your control. You can have a stop loss. You can always come out when the markets are not doing what you expected it to do when you executed the trade. Markets have gone into profits. Maybe you're seeing the market sentiment changing. You can always take profit. It is in your control. Okay. Number 4, you can track your trades and learn from patterns. Okay, so if you track your trades and learn your patterns, you journal, you meditate, you learn about what you're making wrong, you read more books in order to improve your knowledge capability, you watch successful traders in order to understand what they do. That is a trader's mindset. Number 5, you focus on probabilities, not emotions. Okay, that is very, very important. This is where you hear a lot of traders saying, kill the emotional part of you. The emotional part of you wants to be right. The emotional part of you wants to be actively trading. The emotional part of you wants to boost its ego and show your other peers that you know what was going to happen in the markets, when really, in the true essence, no one really knows what will happen in the markets. And number 6, you stick to position sizing and risk management. You're consistent in the long term. And this is what we stress here at Financial Hub. This is a long-term methodology for you to make money consistently in the financial markets. Now, when I say in the long term consistently making money, I don't mean you will not lose on a trade or you won't lose money. You will, but it is very much controlled and it is much less compared to the winners you get. And the quote that goes with all this in one sentence is, a trader works with odds. A gambler lives on hope. I'll repeat that again. A trader works with odds, a gambler lives on hope. Okay? So, at the end of the day, I've given you the blueprint of understanding a trader and a gambler. If I've mentioned anything that you do, be it on the good side or the negative side, work on the good side to make it better, do it more consistent and never stop. If you have mentioned you and you find yourself on the negative side, try and kill that side of you, unlearn, relearn, and come on the opposite side in order to improve as a trader. Now remember, like I said, this doesn't only imply or work in the trading space, it also works in real life. If you do not, like I remember, and I took this big risk, if I share a short story, when I was in primary, I used to be a very good swimmer, and I used to swim a lot, and I used to be number 1, and I used to be, it was good, and I used to enjoy myself. When I went to high school, the high school that I went to didn't have a swimming pool, and I hope they do have a swimming pool at this time. But they didn't have a swimming pool. So for 2 years straight, I did not swim actively. Maybe when I went home on holiday, maybe I've gone to Mombasa here and there, but actively practicing and training, I did not enter the water to do that. Now, when I was in Form 3 and the year was just starting, the swimming galas that happened around Nairobi, and I was told, and the teacher just came randomly and asked, "Who knows how to swim?" And I put up my hand. Of course, I knew that I know how to swim. I've been a swimmer. Okay. Now, my friends, we went to swim at a girls' school. And that's why I won't mention the names and the schools, but we went to swim at a girls' school. So there are a lot of girls, a lot of ladies, a lot of guys. So you want to impress them, you're ready, you're there, you're stretching, and you want to swim. Now, the risk that I'd taken was a good risk. I knew how to swim, but the bigger risk on the other side, I haven't been training. What makes you think you're able to race or go against the people who have been swimming every single day? But anyway, there we go. We're on the podium. I'm just about to enter. You hear that countdown. 3, 2, 1. Then they clap that thing or they shoot the gun and you jump into the water. I jumped into the water and I started my swim very nicely. And I was very proud of myself. It was breaststroke. I was very good at this. But it was a 100-meter race. So you do 50 meters, then you do another 50 meters. So it was quite a big pool. So when I got to the 50 meter, no, actually it was a 50-meter race. It was 25, yes, one of the two. I did very well and we got to the first end with my other competitors at the same time. But my friends, going back, my body shut down. I could not move at all. I could hear my teammates shouting my name, "Caleb, Caleb, go Caleb." But I wasn't moving, my guys. I took a big risk that I wasn't capable of. It wasn't a league I was supposed to be into, and ended up losing. And I remember after that, I never went for another swimming gala. But this has always haunted me, and after finishing school, I got a coach who taught me how to swim, and at least I'm better off. But I don't take those gambles. You don't just come and say I know how to trade just because you've known trading for the last 1 month. Anyway, that was a short story that I wanted to share. Just came into mind, and I thought maybe it will help some of you understand or solidify what I was sharing today. I gambled with swimming instead of actually executing it well. In terms of consistent practice, training, and understanding my strokes and all that well. So you guys stop gambling with the markets and start trading professionally with the markets. You can follow up and look at different traders who've been doing this, the big traders, the likes of Paul Tudor Jones, Ray Dalio, the Jim Simons who passed lately. Look at what Warren Buffett has been doing. Those are the guys at the helm of what we do. Try and imitate what they do in order to become a good trader yourself. Stop following this get rich quick, these social media things, people coming online saying the way they bought these cars and all that. How do you know really it's really trading? Try and figure out how trading works and how you can benefit in the long term as you, not as a collective, not as a group, as you individually. At the end of the day, it's about you. So hope you've learned a thing or two. Like I always say, stay woke, stay financially literate, and I'll see you guys in the next video. Peace.